Vlad Tenev is speaking out. Earlier today, the Robinhood co-founder and CEO joined Yahoo Finance live to discuss why the company restricted trading on stocks like GameStop and AMC. And the company's raising more than $1 billion from its investors because of rising cash demand. Here's what he said.
Robinhood today has already started allowing limited buys of these equities that yesterday went to position close only. They went to position close only, which means customers that held them weren't restricted from selling them. And we have thousands of other securities that are available on the platform. Brokerages and other financial institutions do this all the time. They've been doing this throughout the week. And it's just part of day-to-day normal operations. Now, sure, Robinhood gets a lot of attention for it, but this is just a standard part of practices in the brokerage industry and the broader financial industry.
Vlad, I think there's a broader question here about whether Robinhood is equipped to handle this kind of surge. And you talked about it on Wednesday, that there is in fact a movement that's happening. The speed with which these trades happen, the scale with which they happen, it seems to have shifted because of social media, because of the information that's online. And yet with that, there are questions about the size of your company as well as your balance sheet, your ability to handle these market dynamics. How confident are you that this is not going to happen again?
We're very confident about our future. And that's really born from the fact that every day people are taking control of their financial futures in ways that people haven't before. And that's something to celebrate. And people are trusting Robinhood with their entry into investing and with becoming investors. We see that continuing, and we're doing everything we can to make sure that we allow access to the markets within reason and also provide the education and tools that customers need. And I'm very proud of the team for everything that we've managed to accomplish. And brokers have been having issues. They had issues today. This is continuing industry-wide, and our performance at the market open, our systems were operational, and we're very, very proud to have unrestricted these symbols and allowed customers to buy them again.
Vlad, Zach sort of alluded to the movements that we have seen reported out over the last 24 hours. You drew down your credit line. You also had a capital raise of about $1 billion from investors. Can you confirm the specifics that have been reported out in terms of that capital raise, that investors were in fact given equity at a discounted valuation that would be tied to the price of the shares if Robinhood went forward with a public listing?
What I can say is that we have raised substantial capital through 2020, and the company is well capitalized, and we're proud to have so many investors that have confidence in the company and are continuing to back Robinhood so that we can continue our growth and serve our customers better and better through the future.
And Vlad, I mean, I hear what you're saying about being better positioned here, and then that this volatility isn't going to get you guys again in the future. But to kind of back that up, I'm sure people kind of want to be, secure in trusting you on that front. And I just got to return to my question because it doesn't really sound like you answered it in terms of when you realized this was going to be a problem. Because, like I said, other exchanges didn't necessarily cut off, and TD Ameritrade and Schwab didn't cut off buys. And it would seem like if you allowed buys to continue, that it would be essentially selling lottery tickets to your customers, knowing that there was going to be a problem with the drawing, to use the metaphor. So at what point did you realize there were issues around this that you were going to need to raise $1 billion?
Well, look, I don't really want to get into the details of exactly what happened when. I think if you look at this entire situation, it's a novel situation. A relatively small number of stocks have gone viral on the internet. And as things that go viral on social media and the internet do, there's an exponential growth in interest. And so we have to be prudent, and we have to have prudent risk management. And that's what the firm did.
Let me follow up on that point that Zach made, because you, as in Robinhood, did in fact sort of create this zero or commission-free sort of trading platform, which we've seen other brokerages sort of emulate. But it does feel like there is a level of trust that has been lost as a result of the actions that Robinhood has taken, whether it's fair or not. And we have heard this from those on Wall Street Bets, some who we spoke to yesterday. Given that we have seen a number of brokerages already adopt this model that you helped make popular, I mean, what's the case that you make? Why do these investors stay on Robinhood, or why should they stay?
Well, again, what we've done is something that other brokerages have done. It's not unique to Robinhood to place restrictions on purchasing certain things at certain times. Other brokers have done it. You've had them on your show explaining their rationale. So I understand, obviously, that people want to not be restricted from investing, and we're all about that. We want people to have access to the markets, and Robinhood stands for that. And we're going to do our best to do that in the future.